The UK's economy has generally performed pretty badly in recent times. For example, when you look at it weakening against the US dollar over the past 50 years or so, with you being able to see that here going back to 1971, when £1 would have been worth over $2.60, and with £1 now being worth just over $1.30, so almost half. There was also Liz Truss's mini budget in September 2022 that nearly crashed UK pension funds with gilts or UK government bonds that should be one of the most stable financial instruments given that they're from the UK government, but that were down 50% at the bottom in September 2022 compared to the previous peak. And with the UK then entering a technical recession in 2023. So certainly not great. But the UK has actually experienced some growth recently. And in this video, we'll be looking at what kind of shape the UK economy is actually in some more detail. Because most people understandably tend to focus on the United States economy, given that it's the largest, including me, because I covered this recently in a video that I'll include a link to here and in the description if you want to check it out. But I wanted to do the same for the UK's economic and financial system. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a quick reminder that you can contact me if you're looking for crypto coaching. You can sign up for a free account with Koinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, and I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage that's out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5. Just a reminder that nothing contained here is financial advice, and let's jump straight in and look at the health of the UK economy. Firstly, let's take a look at the UK's GDP, gross domestic product, or growth in other words, because this has been positive so far in 2024. You can see the 2 consecutive decreases in UK GDP in 2023 in Q3 and Q4, followed by a large bounce back in 2024, with this estimated to have increased by 0.6% in Q2 of 2024, and this was 0.7% in Q1. Which was the fastest growth in more than 2 years. UK productivity increased also, but was still lower than in 2019, and there was no growth in June, mainly due to low retail sales and a strike by doctors, with predictions for the rest of 2024 not as strong as we've seen here. And if we unpick this in terms of different sectors, the services industry grew by 0.8%, in Q2 of 2024. And this helped to offset the falls of 0.1% in the production and construction sectors and customer-facing services. Professional, scientific and technical activities saw the largest growth of 2.5%, especially areas such as scientific research and development, legal activities, and architectural and engineering activities. And if we compare real UK GDP internationally with G7 countries, we can see that the UK performed worse than the other countries before 2024, but better than most in Q1 and Q2 of 2024, with Germany particularly struggling when you look at its annual growth rate, which is actually minus 0.2%. And the IMF released on the 16th of July 2024 its forecasts for GDP growth for the G7 countries that you can see here. And the IMF increased its forecast for UK GDP growth from 0.5% to 0.7% and predicts GDP to be 1.5% in 2025. So while this was on the whole a pretty good sign for 2024, it would need to continue as it isn't enough by itself, as we'll see a bit later in this video. And we can also look at the UK PMI to indicate possible growth in the economy, with PMI being the Purchasing Managers Index, in case you weren't aware. And we can see that services and construction PMIs are increasing in all areas, with the UK being the darker line, showing it being well above 50, which is the figure that indicates economic growth. And you can see the UK being above France and Germany here. In terms of UK trade, there was an increase of 1.4% in government consumption in Q2 2024 and a large trade deficit, as you can see here. And you can see here the trade deficit that the UK's had over the past 3 years each quarter, with an increase of 0.8% overall in UK exports, mainly in services, because there was a fall in goods exports. But imports increased by 7.7% in Q2 of 2024, following 3 consecutive falls. Let's move on now and look at the size of the UK's debt, because you can see here the amount of borrowing by the UK government, which stood at £3.1 billion in July 2024, which was an increase of £1.8 billion compared to July 2023. And the total UK government debt was £2.72 trillion at the end of 2023, with the majority, so over £2.3 trillion worth, made up of medium and long-term bonds. And I mentioned these government bonds, gilts or gilt-edged securities, right at the beginning of this video. And in case you were interested in zooming out and seeing how this compares further back in history, you can see the amount of UK government borrowing since 1901 here, with it being measured as a percentage of GDP. And you can see the cyclical nature of this, but it doesn't hide the fact that the UK's debt is about £2.7 trillion. And as I've just mentioned the percentage of GDP, let's look specifically at how much debt the UK has compared to its GDP or growth, because this reached 99.4% in July 2024, which is the highest it's been since March 1962, and debt to GDP was below 40% from 1983 all the way until 2009, with a financial crisis that took place at around that time. But currently in 2024, the UK's borrowing very nearly covers all of its GDP, which is obviously a large concern. And how much interest does the UK government have to pay on this large amount of debt? Well, in July 2024, the interest due on the UK's government debt was £7 billion, which has remained relatively similar to the past 2 years, with some fluctuation, but is the second highest amount of interest due in a July since records for this began back in 1997. And you can see that here going back to 1997, with it fluctuating quite a lot, but generally increasing over this time period, with the figures on the right-hand side being in billions of pounds, because interest payments due on government debt was £7 billion in July 2024, but it was also £9 billion in April 2024, nearly £13 billion in April 2023, £18 billion in December 2022, and over £20 billion in June 2022. Although I suppose you could say these 4 highs have decreased over this 2-year period. But as we know, government debt is just one metric to look at as part of a wider and complex economy. And summarising this section a bit, looking at whether the UK government's budget runs at a surplus or deficit, the total UK government revenue for the 2023 to 24 financial year was nearly £1.1 trillion. However, it spent over £1.2 trillion, which meant that the UK's government budget was in deficit by £120 billion, equivalent to 4.4% of GDP. And you can see a graph from the Office for National Statistics, or ONS here, that shows how often the government's budget has been in deficit or surplus, with this fluctuating a lot, but we can clearly see larger deficits since the 2008 financial crisis. And let's now move on and look at interest rates, because the Bank of England, the UK's central bank, cut interest rates by 0.25% in a meeting on the 31st of July 2024 in a tight vote with a 5-4 majority lowering interest rates, with the other 4 members preferring to keep interest rates as they were. But following that meeting, interest rates in the UK went from 5.25% down to 5%, which was the first reduction for more than 4 years. And we can see here that interest rates have normally increased prior to a recession in history and have been lowered either before a recession started or right at the beginning of one. So if we look at the large increase in interest rates in the UK, followed by a beginning to lower these again, this could indicate that another recession is on the cards, or at least potentially some economic uncertainty, instability, and pain. But lower interest rates are bullish for assets such as crypto, stocks, shares, etc. Mortgages and borrowing become more affordable, with even the housing market responding positively to the recent 0.25% interest rate cut, with house prices being up 4.3% compared to last year and reaching the highest they've been for 2 years, with them not being far off the record set in June 2022. And the Bank of England's next Monetary Policy Committee meeting is on Thursday the 19th of September, so this is one to keep an eye out for. And I've included the last 3 Bank of England meetings of 2024 here, so you can see when they take place, with one in November and then December after the September meeting, as well as the first few in 2025 here now that are due to start in February, followed by March, May, and then June. And its governor, Andrew Bailey, will be looking closely to see if the inflation rate stays low, because CPI, or Consumer Price Index, was high at 11.1% in October 2022 and came all the way down to 2% in May and June of 2024. However, CPI did increase again from 2% in June to 2.2% in July 2024. So the Bank of England will be looking for inflation to stay low if it's to continue reducing interest rates. Otherwise, it might decide to pause in one of the meetings I've just shared with you. And if we look at inflation over time in the UK, going all the way back to 1860, rather than just more recently, we can see the general increase of this. And we can put that inflation into perspective, because we can see here that if you started with £1 back in 1860, you'd need £152.38 today to be of the same value as £1 used to be, and to adjust for this inflated currency, a bit like a balloon inflates. And rather than just looking at £1 back in 1860, if you increase these amounts, the figures get even more startling, because £10 back in 1860 is now worth over £1,500 today. £100 is now worth over £15,000. What £1,000 back in 1860 would get you, you'd need over £152,000 for today. And finally, £10,000 back in 1860 would be worth over £1.5 million today. So why does this happen? Well, put simply, an increasing money supply, an amount of liquidity in the financial system, also called printing more money. And we can see the M4 value here, which is a measure of the total amount of currency and other liquid financial assets in the UK's financial system, with this now surpassing £3 trillion in terms of money supply. And you can see the large increase in money supply since this graph starts in 1982. So we've got an increasing supply of pounds, or printing money in other words, which inflates the economy. And this all means that the real value of the British pound, or GBP, decreases or devalues over time, meaning your purchasing power becomes less and less, as you can see here in terms of what £1 in 1860 is worth today. Because £1 back in 1860 is worth just £0.006 in 2024, which isn't even 1p. And if we look at the strength of the British pound against other currencies, we saw at the beginning of this video that it is weakened against the US dollar pretty much by half since 1971, as you can see here again. But if we look more recently, GBP has actually strengthened against the US dollar from lows of just over $1 to £1 in September 2022, reaching $1.31 to each pound at the time of recording this video. And if we compare GBP against the euro, we can see a similar pattern, with the British pound generally depreciating against it, because in the early 2000s, when the euro was in its infancy, £1 would have been worth between 1.55 to 1.7 euros. And even if we fast forward a bit to between 2003 and 2007 here, £1 would have been worth 1.4 to 1.5 euros. However, in 2024, £1 was only worth 1.1 euros in January 2023, and about 1.18 at the time of recording this video. However, like with the US dollar, we can see a recent strengthening of the pound against the euro, with this graph going back to February 2023, when £1 was only worth about 1.11 euros, whereas now £1 is about 1.18 euros, which is about a 6.2% increase against the euro. And if we look at the strength of the UK stock market, London has famously had the most valuable stock market in Europe for years. However, it lost this position to Paris in November 2022 for the first time since records began in 2003, but then, nearly 2 years later, regained this back in June 2024, with the total value of companies listed on the London Stock Exchange being $3.18 trillion back in June. And if we look at the strength of the stock market through the FTSE 100 stock market index, like many indexes and assets, we can see it's dipped at the end of August into September this year, but despite that, is still up 6.8% in the past 6 months alone, 9.4% in the last year, and over 644% since 1984. However, according to the UBS Global Wealth Report for 2024, the number of millionaires in Britain is decreasing and is forecast to continue decreasing in the next few years. As you can see here with the UK on the far right, with this measured in dollars rather than pounds, by the way, in this report. However, the UK still remains the country with the third largest amount of millionaires in the world, with roughly 3 million millionaires, which is about 5% of the world's millionaires, behind just China and the United States, with average wealth per adult putting the UK in 13th spot and in 8th place if you take median wealth, which shows more of an equal footing in terms of wealth, especially when you compare it to a country like Singapore, for example, which is in 8th place for average wealth, but then 18th place for median wealth, showing that the rise in wealth is probably taking place more in the upper income brackets here, rather than for everybody. And according to a 2024 report by Knight Frank, the top 5 European cities that high net worth individuals are considering relocating to are Paris, Berlin, Barcelona, Vienna, and Madrid, with London not making the top 5. And there are large concerns currently over Labour's plans for future tax rises, especially looking at capital gains tax if you hold crypto. But with this being called a wealth tax, so it's likely to encompass several different areas, such as inheritance possibly. So it is important to keep an eye out for the autumn budget to see what the impact is of this and at what levels of gains. And I will be covering this in a video soon to look at what might happen in terms of people's crypto investments and tax liabilities. And as we're looking at metrics that can indicate financial strength and the health of an economy, let's look at a slightly more complex one in the yield curve. And what we're looking at here is the spread between 10-year versus 2-year UK bonds, and particularly to see whether it dips below zero, because you can see here that the yield curve did invert for UK 10-year versus 2-year bonds in July 2022 and remained there pretty much for 2 years until 2024. And an inversion of the yield curve normally precedes and therefore can predict a recession, which obviously signifies economic uncertainty and pain, which leads to more liquidity being pumped into the financial system, lower interest rates, and ultimately higher asset prices like crypto. But let's move on now and look at the UK's jobs or labour market, because the most recent figures in the UK at the time of recording this video were released on the 13th of August 2024 by the ONS, or Office for National Statistics. And I'll include a link to this report in the description of the video if you want to check it out for yourself. But we can see that the unemployment rate, with the most recent data being from April to June 2024, are not that high and at similar levels to previous years really, but are nowhere near the levels of unemployment seen in previous crashes, such as after 2008, for example. And if you zoom in a bit more, you can see that the unemployment rate decreased from 4.4% to 4.2% over the past quarter, bringing it back to the rate last seen in December 2023 to February 2024. Although you can see that the rate is pretty steady, especially when you compare it to the United States unemployment rate that you can see here, which has increased over the past year pretty significantly and led to market concerns. Although you can see that the rate is actually very similar in the US at 4.3% compared to the UK at 4.2%. And I did cover the US economy specifically in a previous video that you can find a link to here and in the description if you want to check that out. But coming back to the UK, we can see that despite relatively strong unemployment data, the number of job vacancies remains quite high, although they did decrease by 26,000 from the previous quarter, down to 884,000. And you can see the consecutive decreases in the number of vacancies in the UK, which is positive. And linked with jobs data, let's have a look at pay growth, because average pay or wage growth in the UK has slowed, rising at a rate of 5.4%, which is the lowest it's been for 2 years, which was from June to August 2022. And you can compare this 5.4% wage growth to the 7.9% from June to August 2023. So it's certainly come down, and this isn't inflation adjusted, so it doesn't include CPI, which would obviously make the real rate lower than this. But with wage growth slowing, this is a positive sign for inflation in the UK, and possibly a sign that the UK can continue lowering interest rates, which would be positive for risk assets such as crypto, or at least it's one metric that the Bank of England will factor into its decision. So overall, there are positive signs in the jobs data for the UK, but the UK Treasury and ONS have urged caution in the jobs market for now, saying that there's still work to do, mentioning the high number of vacancies, redundancies, and those not actively seeking work. And let's now look at retail sales in the UK and therefore consumer confidence, because retail sales volumes fell by 0.9% in June 2024, but then rose by 0.5% in July 2024, with retail sales generally looking quite strong, as they rose by 1.1% in the 3 months leading up to July 2024, compared with the 3 months leading up to April 2024. And linked with this idea of strong consumer confidence in the UK, we can look at GfK's Consumer Confidence Barometer, which you can see here, with the ONS and CBI also conducting their own surveys. But this shows the large decrease in consumer confidence following the 2008 financial crisis, and then again more recently in the past few years, which isn't surprising. But this does also show an increase in consumer confidence since 2023. So we'll see if that continues, and it can keep increasing back to zero. And finally, the UK also has an aging population, which can have an impact on public finances, such as healthcare costs, state pensions, and it can increase inflation. Because in the UK in the last 40 years, the number of people aged 65 and above has increased by 3.5 million, which is a 52% increase, with there being over 10 million people aged over 65, which is about 18% of the UK population. And the number of people aged over 65 is predicted to continue growing in future, with the number of births decreasing also in the UK, as you can see here, with this decreasing since 2010. And this is measured as the average number of children that a woman would have in the UK. So that ends this video. And to summarize very briefly, there are some positive aspects to the UK's economy, as we've seen. However, there are some obvious large fundamental concerns, particularly surrounding the UK's debt. And the only real solution to this is printing more money and injecting more liquidity into the financial system, which further increases inflation, devalues the pound, weakens your purchasing power, but is positive for assets such as crypto. And then, sometime later, this all happens again like a circle. But as always, I'd love to know what you think in the comments below about it. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. There are also links to Koinly, Trezor, and to contact Myna in the description of the video also, as I mentioned at the start of the video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.